Hello and good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, October 18th. Carlos, Iman, Kelly, Mark, Peter, great to be with you guys this morning on this Wednesday morning with the dollar seeing some interesting price action. So on tap today, we'll hit the dollar index real quick. You know, it's still flirting with a major resistance. I don't really know what to do out of this part on the index per se. Dollar Swiss got stopped out on that trade in overnight that we were talking about, broke right through the highs. Dollar CAD actually panned out pretty well. Did find some near-term support at a median line, so we'll talk about that. Dollar Yen also breaking out of the downside pattern that we've been following, so interesting price action on that. We'll touch base on the Euro Pound, also seeing a nice little bounce here. Pound with a little bit bigger of a drop than we wanted. We'll touch on that. And gold, which is also breaking support today. Okay, any other questions or trade setups? As always, feel free to throw them on the message board at any point. So it's been a really interesting 48 hours for me, at least. Look, trying to call these highs is never really a prudent move, but you know, I'm still not of the mindset of continuing to favor dollar strength. It hasn't worked out for me the last 2 days. Well, not across all the dollar pairs. Obviously, like we said, dollar CAD looks pretty good, but as I noted in the report last night, guys, you know, all of the setups were dollar based. You don't want to congregate all your trades or focus all your trades on one side of a directional buy, specifically on a given currency. So I didn't want you guys getting involved in all three, but all three setups looked pretty clear. And although dollar yen didn't hold that resistance level, the break certainly fueled that rally and gave us a little bit further validation, at least in the near term, of what we should be looking for. So to go over the dollar index real quick, here's what we looked like earlier in the week as we were opening the session. I guess this was on the Sunday update. You know, we were talking about this formation here. Our bearish invalidation level for the near term was 93.51, this region right here. Now, yesterday in the webinar, I showed you the new slope and I'm working with, and the upper parallel did actually catch the highs in overnight trade. So we adjusted our slope instead of using this high and this low to using this high and this low, a little bit more near term. Wasn't quite as clean at the lower parallels, but obviously the median line breaks on both sides were extremely and exceptionally clean, and the 618 converged on that upper parallel. Okay, now obviously we shot through a little bit, but we didn't really get many hourly closes above, and you're seeing some clear-cut divergence in price action. Price action making a higher high, the oscillator making a lower high. So I find myself torn, guys. You know, rubbing my head here. I still like the short side. I don't want to be stubborn with the trade. You know, we've gotten stopped down on one of them already, still holding dollar CAD, but you know, that's still kind of wandering. So if you hear hesitation in my voice, it's well warranted. Again, you know, I'm still of the mindset that this thing is at risk while you're below the highs that we just made in overnight. So what does that mean for us on whole? Well, as I always say, we want to take every trade on its own merits. But looking at the index, again, 60% weighted the euro, you know, it's just a kind of a spot that you still want to pay attention to. Here's what, any questions on dollar index before we move off? Remember, you still have the major, I guess, I don't want to call it major event risk, but you do have Yellen on tap later this week who will be making comments, and seems to be something that the markets are looking forward to. And then today at 2 p.m., you do get the release of the Fed's Beige Book, and that's basically an updated assessment on the Fed's 12 districts as it relates to employment, as it relates to inflation, as it relates to you know, GDP growth. It's sort of a nice whole kind of gift wrap picture. Like I said in last night, it's not necessarily a major market mover, but I think in this current environment where the markets are essentially pricing in, you know, 80% chance that we're going to see an interest rate hike in December. Okay, here's what the CME tool looks like for December. 91%, wow, even bigger. So with the expectation so highly stacked for a firm raise heading into December, you know, I think that's why that if we do get some sort of miss or some sort of alert on the Beige Book, if you see any type of reprice here, it could be what we need to kind of get that fuel for the dollar downside again. So we'll have to reassess, but do keep in mind that that release later today does have propensity to offer a little bit of a pop in volatility in this environment. All right, and then again, keeping in mind the broader picture, I've been showing you this chart every day. It's the weekly chart of dollar index. Again, just continuing to highlight, on a closed basis for the week, this is kind of critical still. Okay, not bad on near-term price action. So cautiously, again, looking lower. I would want to see a little bit more of a convincing price action turn. I might have got a little too excited on the decline here. So let's see what the U.S. Open has for us. It seems that DXY doesn't know which direction it wants to take, right? Eman says, yeah, so, I mean, this is the trick of trying to play these near-term turns in price, Eman. They're never easy. I wouldn't say it doesn't necessarily want to know what direction it wants to take. So if you remember, Eman, early in the week, when this broke, it was clearly up, right? We were like, all right, look for 93.50. And the slope at that point that we were working with was right there. The breach just reinforced the topside bias. So the question, or what we're trying to do, is trying to see where we're going to find some exhaustion if this is a corrective play. So I wouldn't necessarily say it's directionless, because on the broader, it still is pretty clean. We haven't invalidated anything, Eman. So while near-term price action hasn't been very clear to us, the broader picture is still, you're just coming off support and checking resistance. Our focus in these webinars, obviously the near-term approach, that's what I think I would agree with you. Yeah. I still think this has sort of the hallmarks of exhaustion here, but I want to see a little bit more convincing price action on the near term. Now you had an outside reversal candle right there on an hourly chart. There's a couple of different things, and again, you're seeing divergence here. There's a couple of different things I'm looking at, but it still looks like a possibility for an exhaustion here. At the end of the day, if we clear the highs we made overnight, Eman, it's clear cut. You got to be constructive. Okay, you got to be constructive. If we get through the weekly low week close for 2016, you have to let room for a possible rally, maybe even as high as 95. Not my preferred bias, but that's what we have to be prepared for if it does give out. Does that make sense, Eman? Just give you a little bit clearer of a picture. Yeah, near-term price action. I agree with you. It's been kind of touch and go, but the move hasn't really invalidated anything for us yet. Eman says, yep, thanks. You're more than welcome. Good question. Okay, so we'll try to be optimistic here and look if we can't still get that pullback in the dollar, still testing that resistance. So dollar Swiss, my friend, who've been estranged from dollar Swiss for years and years and years. We've been all about it for the last couple of weeks. On the rally into resistance was super clear. On the pullback was super clear. To start the week, we came right back into resistance again. And as I said last night, I was holding short basically right off 98. And I was looking for a clip into that initial target, basic 38.2, former swing highs. And then ultimately, I had the rest of the limit, 3/4 of it down here at 97.30. I think I had the limit at 97.33 to be on the inside. Long story short, we barely grazed this, and then we shot right through the highs. Here's what dollar Swiss looks like now. Now on whole, if you had played this a little bit closer to the chest, and again, I kind of got a little bit, I don't want to say greedy, but a little bit overly encouraged on this once we saw that turnaround yesterday. I really didn't have, this would have been an area you would have taken off a quarter or half of the trade, stops at break even, and then look to leave the rest there. I didn't. I took a 15 pip stop on the rip to the upside, and here we go. At the end of the day, we're still holding last week's high and the monthly opening range highs. Again, another thing that's keeping me very cautious about trying to do anything yet, of trying to ascertain whether this is the breakout or this is the last hurrah. Obviously, you're still getting momentum holding below 70 despite the breaks that you're seeing. And the monthly opening range, again, this has nothing to do with my opinion or anyone. This is objective price action check. And here's the opening range high for the month holding as resistance. So again, a scenario where it looks like it still can turn lower, but you just, you want to be cautious about trying to play it. Honestly, I'm not going to do anything here above 98. I kind of would like to see this thing turn much more aggressively from this region if we're going to hold the monthly highs. But above 98, it's it's in no man's land. The next really upside target, if we break the opening range high for the month, is the median line. The 50% retracement takes you all the way up into 98.80. So as I noted on Sunday, what I like about this, I literally wrote this word for word, is just the sheer simplicity of it. It's a super clean formation, real nice, real nice. If this is the break of that trend line, and again, this trend line, guys, take it back to the daily chart, is the yearly trend line coming off the yearly high. It's only 2-point touch, but we did see a push through earlier this month and a failure. And again, the monthly opening range high objectively sitting right there. Also keep in mind that you have the 200-day moving average also in that region. So while we did take that stop on the overnight short, I'm not, even though we broke through the bearish invalidation, I'm not really looking higher from here. I'm neutral to looking for exhaustion for a short position. Okay, now again, things could change if we break the monthly opening range high. Certainly on a daily close, if we break and close above that, sayonara, forget the downside. But even on this move here, I'm a little skeptical. So that's dollar Swiss. A little disappointing, but live to see if we can't get this resistance. Any questions on Swissy? If this price action keeps up, it's going to go back on the abomination list. And you won't hear about Swissy for another month. So dollar CAD. Dollar CAD is actually the one that did work out pretty decently yesterday. It came into the median line in overnight trade before turning higher. Here's what dollar CAD looks like. I want to bring your attention to this formation, which we added yesterday in the webinar, I think. There were two different ones we were looking at. This is kind of the one that I wanted to highlight yesterday as the one I was working with. And the monthly opening range high, again, super objective, 25.97, was just higher. Really good, risk to reward limit as far as where your stop would be, just above that. And you're looking for a tag of the median line. More so, I'm interested for a move into the monthly open. That's 24.85. Really nice pivot in price, and basically the monthly opening range has taken shape, straddling that open price. Key support, still at 125.20, 125.15. Cool, just below the monthly opening range lows. Again, that Fibonacci confluence also now comes on the lower parallels. So I'm inclined to still look to work with this slope, and it has, been working pretty decent. There's the trade in overnight. It came into the median line, but you didn't quite make it into the monthly open. We literally turned just pips ahead. The low is 124.87. But still looks good, in my humble opinion. Again, turn from momentum here, right around the 60 region. I want to see this thing move lower. On whole, it is a simple range. I'm more inclined to take the short side of it because we broke the downside of this channel. So within the range, I've been liking the shorts better, but I wouldn't be targeting anything outside the monthly opening range until that actually gives out. If you're holding shorts and you do see price action drop in 25.15, I think it is worth to leave a little on, bring your stops in, and see if you can't get that break. But on hold, this makes a region that you need to be mindful of. Any questions on dollar CAD? Okay, that is number 3. Okay, moving right along. Yenski, here's dollar yen. Here's what the abomination looks like at this point. Sheer breakout, very simple. It's a perfect example of, why we have to have such a really good and very profound risk reward, risk management strategy. This was a perfect play. We had a couple of different, we turned bearish at the break below the median line. Initial target did get taken out 112. I was still looking for a drop into those lows, the lower parallel. And as we talked about this in time, you guys remember when we first turned, the initial target was down here, 110 to 67 to 1082. Price action moved a little bit more slower than expected. We moved that target up to 111.10. To start the week, this was kind of a big confluence region. And as time decayed, that level kept on moving up. Former swing lows, what I noted last night. Once we break the highs and the parallels, we're back through the monthly open. I think you have to look higher. Here's what dollar yen looks like. I mean, the daily chart's just ugly as hell, but just to show you an objective bounce off the 200-day moving average. Again, you guys, I say this all the time. I'm not a big moving average guy, but the markets seem to respond to these 100, 200 longer-term moving averages for the longer-term players here. A lot of times will offer just basic support resistance. So we overshot the 236. Quick reversal takes us right back through the monthly open. Monthly opening range high, still just a bit higher, near 113.43. But again, simple range condition right now. On the near term, I do think you've invalidated that near term slope. So nothing to do here as far as fresh exposure. If you got a chance to get on the long side here, or you're holding any longs above 112. One other thing I'd just highlight to you for a real near term is the 618 of the advance is where you want to see this thing stay above into the U.S. Open. If you can hold 112.75, look for the stretch higher. If you fail here and it kind of spikes back, look to be a little bit more protective on your limit and bring that in. Questions on dollar yen? Okay. Moving right along. By the way, Jamie does have a on the watch list for short near 112.60.75. It's kind of where that 618 was I just showed you. Now that we're straying higher, again, the opening range high is the only thing I'd really want to see hold before trying anything on the short side again. Euro looks like this, number 5. Earlier in the session, or earlier in the week, here's what it looked like on the euro. We'll come back to gold in just a moment. So this thing was coming still within the confines. As soon as we opened the week, we noted that we were sitting on the monthly open. The monthly open sat right on the median line, or the 50 line for the current operative structure. And again, it's always beneficial to keep your eye on the longer term charts. Here's what the weekly chart looks like for euro. You get a little bit better of a sense of where we're bouncing off of. You see this? Basic 50 line, break, saw support, and on a closed basis, I mean, it's kind of uncanny. Here's what it looks like. It's as clean of a bounce you'll get. So the question is the rebound from here going to take you a little bit higher before turning, or is this sort of a nice base and we should be looking for the top side again? That's where I'm caught. Here's what it looks like on the intraday. So just keeping that level in mind, basically the 117.15 level, it's just the highs that you made back in the late 2015 rally there, and that median line. Okay, so with both those in mind, the daily chart, you can still see that slope right here. Okay, and again, last couple of days, finding some support in that region. Bullish invalidation. So the broader trade for euro, and this hasn't changed in a while, remains constructive, basically above the monthly opening range low. It came into a perfect 236 retracement. You have former swing lows. Now, and I highlighted this the other day, you have the lower median line parallel and the 200-day moving average. In a couple of days, it's going to be right up nestled in that corner. So this is still, anything that we've been trying to play on the short side of euro has been something just like really near term. Obviously, ultimately, we want to stay constructive while within this formation. Here's what the intraday chart looks like, getting even deeper. Where's momentum? Yeah, and you've seen here as an example, for example, of momentum holding like 40, 60 now for the last, since late September. Intraday looks like this. And again, here's what the euro looked like to open up the Monday session, at the end of the Monday session, I should say. Again, there was that near-term swing high. We broke below that. The 618, 117.50 is what we were talking about. We're kind of showing some divergence in momentum right into that low. Price action making a lower close. Was it a lower close? Ooh, that's close. Okay, very slight divergence. Very slight divergence. I wouldn't really stress that. But you're basically seeing price kind of hesitate around that 618. So how do we play this from here? Again, this is one of those ones where you have to be just focused on the objective monthly opening range. And right here, you're sitting slap in the middle of the monthly opening range. Not your best time for new positioning. So another one I have to wait and see on. Another one, and things can get like this sometimes, guys. They get really frustrating, and sometimes you're just really teed off because the market's just not moving in the way you think or the way you're expecting, and that's completely okay. These kinds of things happen. These cycles wash through, and right before typically as market volatility dies off, you'll see that contraction volatility right before an explosion of volatility. So I do think things will really start to pick up here, but we just got to be patient and pick our levels. As far as the euro is concerned, you're slap in the middle of the monthly range. Put a gun to my head from here. I do think you see a little bit of a rebound, but ultimately I'm looking for either a long position or exhaustion somewhere down in this corner that we talked about, or if we break the objective weekly opening range high, I'd be looking to buy pullbacks targeting the monthly high, and the subsequent break. Make sense? Again, it's not always the news that you want to hear, right? Here's the position. Here's what we should do. On this stuff right now, I think you really just want to be a little bit more cautious. Let's see when we get that washout in some of these pairs. A really quick touch of base here on euro pound. Obviously, pound losses have been a little bit deeper than expected. We're still holding the long side on that, obviously, but pound or euro pound, this was something that we were highlighting earlier in the week as well. It looked like we were holding a really decent parallel here to the downside. Larger scheme of things, what we were focused on is this support bounce. Okay, this larger median line formation just off the lows of late last year and this year. The 50 line was a decent pivot. The lower parallel saw support, real strong rebound, and even though we broke below it, on the way back up, as soon as we broke up, real strong rebound. The low we made was right at the confluence of that same slope and the 618 retracement. That's right here. So you start the week saying, look, expect a bounce, right? And as soon as we pulled back into it, we got the bounce. Well, the focus on the near term was this descending channel. So the bounce, sure, initial target, median line. Largely speaking, you still have to stay bearish on the broader trade while below the 2016 high day close, which converged on the upper parallel. So what happened? You came right back in again. You tested support. You ripped through, kind of sat at the median line for a while, popped through that, and right now we're right in this sort of zone. Okay. Still think you can get a stretch higher near that upper parallel. Again, euro trading where it is might not be a bad trade. It's just that if the pound rebounds as well, you'd have to see euro gains outpace that of the pound to get this higher. But just based on the support barrier that you're coming off of, it seemed like it was worth a shot. Again, not really a trade I'm really a big fan of, but when you get these confluence regions, it's definitely worth taking a look at. All right. Questions on euro pound? Okay, pound dollar. Here's sterling. Just a quick update on that. 34.45, 618 retracement. Just wanted to highlight of the entire advance. Seems like you caught some support yesterday. I kind of want to see this pop back through 31.80, ideally 32, but 31.80 to get the conviction for a pop higher. But again, another one where you're seeing momentum hold those lows as the oscillator, as price action makes a lower low. So again, this could be all just be playing tricks with my head on all these dollar crosses, but they still are kind of, in my mind, showing signs of near-term exhaustion. All right, so sticking to the plan on pound, not really worried about this pullback washing us out just yet. I should probably clean this up real quick. We can leave that. Bear with me one sec, guys. I just want to see something. That's interesting. Okay, so if we take the same mirror of the slope, in fact, the lows that we just made sort of still do fit that. Okay. Huh. All right. Watch 31. Watch 31.45 into the close. Okay, and well, I do want to watch 32.70 because it's this high. It's basically the August high. Let me just see what this looks like. Now, ideally, if we were to turn and break this high, you would want to take an extension first thing, right off this move to see what the measured move is to the upside. But right now, I don't have conviction that this is a near-term clear-cut low. We would need to break this high for me to do that. So just as a drill, I want to see if this comes in exactly as I thought. Okay, so the 618 retracement highlights that 1618 extension anyway, which is the high from August. So this is sort of your initial zone of resistance you really need to focus on. If this high prevails, or if this low, excuse me, prevails, and it does hold into the open, that's critical. All right, so a quick little redo there of near-term price action in the pound. Really highlights a need to break this just one single candle that we made, an overnight trade. Look for a break of that range. A downside, you have to keep looking lower. Unfortunately, in such a scenario, I really do think we'll probably get stopped out on the swing trade. But as it stands right now, you're at support. Okay, you're at support. Questions on cable? Going once, going twice. Sold. Okay. Finally, last but not least on my list, guys, gold. Here's the gold price looks like. Again, not our best play, but the downside break. The downside break of that simple slope. Remember, here's what gold looked like into the open of the week. We said, and I still think this is true. It is a very simple and very clear-cut sort of setup. But the major support that we wanted to see hold didn't hold. We opened up the week saying, look, we're at resistance. It's a basic slope resistance. Maybe going to stretch up into 13.09. But basically, you're opening the week at channel resistance. Inherently, you're looking for, a turn lower. Initial targets was that first median line there, and then finally our bullish invalidation level and the limits on any shorts you would have been here. So we did. We got a perfect drop. It turned literally 2 pips. What was it? I think the low was 81.25. We had 81.05 on that fib. and it coincided with this slope. It's the same parallel, just extended off the low. And you could see we got a perfect tag there. So yesterday, it looked pretty appealing, right? Momentum had made it back from oversold conditions. It came right off that with a nice long-wicked tail to the downside. And I personally was thinking, let's look for a pullback to get back long again. You never really got a decent pullback because the one pullback that you did get just soared, went right through support and into this key support zone. This is the monthly open. This is the 618 retracement of the advance. And while it did break, it's one of those trades. Again, you put a marker and you say, if it breaks below this, I don't want any part of the trade. I have to stay disciplined. I have to stay disciplined. So it broke below that level. Yeah, horizontal support, it's still there. But as far as the slope is concerned, that's kind of out of the picture now. So I would need to see this remount slope support to the upside for us to, sort of write this off as a false break. But as it stands right now, again, you're still at support. You're still at support. Questions on euro dollar? Excuse me, euro dollar. Gold. It's not even Thursday yet. In-term support rests at 1297. Near-term bullish validation 1290. A break there would suggest a larger correction near 1279, 1278. And that's where we are right now, guys. 1279, 1278. Any questions on gold prices? That is number 8. A quick look at the Bitcoin and Ethereum trades that we've been following. I just wanted to highlight that we did finally see the downside break. It's interesting because this one has actually been much cleaner. But let me start off with Bitcoin. Remember, the major play here that we had discussed was this came into basic slope resistance. We've been following the same pitchfork for the last 3.5 months, okay? And then the topside break, as we always say, sometimes you want to scratch it, but same slope, literally caught the highs. So you see consolidation region here. We talked about the consolidation, being this possible wedge, possible triangle formation, whatever you want to call it. Impetus for the break initially would be the former slope resistance that you broke through. You check the support, and that was the initial break that you would look for. But if you wanted to be a little bit more conviction certain, the consolidation break was the second break, and that happened just as fast in a quick fashion. So there's the downside move. One thing I do want to add on to the chart is just a basic retracement. I think we did that here in the webinar yesterday. And again, just off the lows from September, gives you a basic 236. Here, let me copy it to the near-term chart. A basic 236 confluence right here with the median line. That's 5169. Okay, let's call it 5168. And that's sort of the initial level I'd look for, and I would expect to see some sort of near-term bounce off that region too, to be honest with you. Doesn't mean the correction's necessarily over, but I do think that that's sort of a region. If you're holding, well, I hope none of you got really aggressive on the shorts, but if you are holding shorts, if you're trading this on the CFD side, that's sort of where I'd start to look for initial support and possible rebound. Questions on Bitcoin. Levels are like ridiculously clear on this trade. I just wish it was a little bit more of a fluid or liquid rather trade that more people can get involved on. If you're trading on the state sides, guys, obviously we have limitations here because of regulations, but anywhere offshore, guys, it's a big swinger. A lot of opportunity, so obviously, a lot of risk, but if you practice good risk management, this one's just been clockwork. Any questions on Bitcoin? Last but not least, just a quick move into Ethereum. Obviously, it was delayed on the topside break, which is why we were looking for that. This came well after Bitcoin made that rip higher. So inherently, we were looking for a break of the monthly opening range to the upside. This is the range that we highlight as the focus that we just wanted to watch into the weekly open, 350 into 320. Nice 30 pip range. Yesterday broke back below, and now we're breaking back below the monthly open. So it kind of invalidates the opening range near-term bias and does shift the focus lower. Initially, right now at this point, now you want to take on this one, same thing we did on the Bitcoin trade. Quick retracement from the near-term advance. Just want to see where that 38.2 is. Okay, drop to 38.2. You have the monthly opening range low. Objective price analysis would be 287. And a break below that, you're looking for targets 275, 276. Okay, and then the 618 would be another downside target here. Based on where you are in time, you're still constructive above that slope. So if it kicks out into later in the month, early November, that's still the level of which we would mark as our larger bullish invalidation level. Right now, you're at risk for just a larger correction, especially if today closes below the monthly open. If the monthly open is compromised on a closed basis to the downside, I think that reinforces keep looking for a move into the monthly low. Questions on Ethereum? These things take turns between Ethereum and Bitcoin. 2 weeks ago or a month ago, I would have sworn to you that this was the cleanest trade as we were holding this ascending channel formation. This break, again, keeps the near-term focus now lower again, back below 13.14. Okay. That is 9 and 10 for Bitcoin and Ethereum. All right. That's everything that's on my list, guys. Let me know if you have any other questions or trade setups you guys want to review. Feel free to throw in the message board now. Jamie will be on as normal scheduled, I promise today. I'm sure about that. So he will be on for the midweek strategy webinar at 11 o'clock today. So don't forget, stay tuned for that. And keep in mind tonight, RBA employment figures are out. Obviously, we got UKC employment earlier this morning, which was kind of basically in line with expectations. Wage inflation, all that stuff, still a major concern, but numbers were pretty raw on that. And Aussie employment later tonight, as well as China GDP figures this week. You're going to want to keep a focus for the Aussie trade. I haven't really gotten involved in Aussie in a while. We did look at this last week. Just want to give you a quick update on what that looks like right now. Where's my Aussie chart? And this is why. It's messy. If you put a gun to my head, I would have told you that this topside break meant look higher. We opened the week and just, we're looking for support along that former median line of resistance. If this was going to be a bounce, break of resistance and a bounce higher, what do you do with that? What do you do with that? Still think you have to respect possibility for a pop higher while above 78.03. So immediately, yeah, could drop lower. Largely speaking, I don't think necessarily the upside's done here. Could you hit the Kiwi real quick? Yeah, sure, Kelly. Gotcha. Here's what Kiwi looks like. Well, let me show you the daily chart here. So my beef with Kiwi was this. Completely faked me out earlier this month. And, there was my target. I had it highlighted for you guys. As soon as we made that close, we even gapped below it, tested it as resistance for like 3 days, the 71 handle. Big pivot in price, objectively, as well as a 618 retracement of the entire yearly range. And we had bashed through huge support earlier in the month. You had slope. You had the 200-day moving average, which in this pair is rock solid support, break, acceleration, break, acceleration, support, right? Real clean on this pair. So I, got completely confused when we made it back above 71. And the only thing I was looking for after that, I was like, all right, well, if it's heading lower, then the monthly open should hold. Here's the caveat. The monthly open did hold, and you saw the pullback. So for now, to be completely frank with you, Kelly, all I'm looking for He says, I remember that, right? All I'm looking for is some sort of clarity to the near-term price action. You know, I've been looking at this formation off the highs. I think I showed you guys this. It's, you know, it's not really super clean on the median line here. I tried to kick this out to look at the 618 earlier. It looked like that, and I was like, all right, maybe some resistance. You know, maybe, you know, a decent confluence Fibonacci. Whoops. Well, I can drop that actually. But a Fibonacci confluence right here, 38.2 retracement with the 618, you know, bisector. So if you put a gun to my head, I'd say, okay, look for a little bit of a bounce here, and let's try to stay bearish below that gradient. Do I have conviction to put out sort of a major bias for you guys? No. But let's say we were to see a rally, right, near term, or a rebound. If the weekly open, which is basically the same as that 618 extension here, guys, off the highs. This is all off the high for basically the year, the July high, right? So if we, the weekly open comes in right there too. So if we were to rally into the weekly open, and specifically if it comes in this part in time, so basically towards the close of the week here, and that holds, or you see exhaustion there, you know, stop against the high, maybe. Yeah, I think you'll look lower. I think you'll look lower. But again, guys, you know, I've been thrown off this week. I'm not gonna really get, you know, super confident on this until I see a little bit more convincing price action on the near term. Kelly, does that help? He says, great clarification. Thank you. You're more than welcome. Well, maybe the explanation is clarification. I'm still looking for clarification in price action. So hopefully we get some of that played today. And again, some of these trades I kind of just want to reset. I just kind of wanted to reset because we missed some of them. And then on that Swissy, you know, maybe it was just a preemptive jump. So maybe we still are on the right track. You know, the daily charts are speaking. They're speaking loud. And near-term price action isn't. Near-term price action has been whispering. So sometimes you need to wait for that chorus to kind of mesh to get that clearer view on the picture of what's going on. That's sort of my take on Kiwi right now. Any questions on Kiwi dollar? Again, the ones I'm more, you know, really interested right now are still kind of dollar CAD and still Swissy. And dollar CAD, remember dollar CAD, I don't know if I showed you this early in the session, but another one where the weekly chart, we looked at this yesterday, that basic trendline support, break, or support, break, resistance. And that's all that we're looking at. That's all we're looking at. And you can see the potential if we break, right? There's a lot of room. So why I still like seeing if this near-term slope can give us, you know, a hold here. All right, so we hopped into Aussie and Kiwi towards the end. Okay, if there are no other questions, guys, going to go ahead and wrap it up there. Again, thanks for everyone who attended. Keep online for 10 o'clock midweek strategy webinar, and I will see you guys tomorrow morning, same time, same place. Cheers.